Imagine this. You're sitting at your desk, you're watching 4-hour charts, just like you were taught to do, and you're waiting patiently. A day passes, a week passes, and nothing happens. Your capital is just sitting there doing absolutely nothing while you refresh the same chart for the 100th time today. Meanwhile, your friends are at brunch living their lives, and you're glued to a screen that might as well be a screensaver. I know this feeling intimately because I lived it. Welcome to Trade Travel Chill. I'm Annie. If you're new here, quick backstory. I spent a decade building businesses because I was sold this dream of entrepreneurial freedom as a kid, but it turns out it was just a prettier cage. So I pivoted from that into trading, looking for actual freedom, not the Instagram version, but the real kind. So here's what's interesting. Most of you know me as a day trader on YouTube, but that's not really the whole story. The reality is that I'm an all-time frame trader. And today I'm going to show you exactly why limiting yourself to one time frame is probably costing you more than you realize. You see, when I started trading, everyone said, just stick to the 4-hour time frame. It's the easiest one to master. And so I did. And I got to tell you, I was bored out of my mind. I was watching paint dry whilst opportunities flew by on other timeframes. And then the bull market hit and suddenly I needed the daily charts for the big macro plays, right? But those trades took months to unfold. It was more waiting, more boredom, more missed opportunities. So I swung completely the other way. I went all the way to a trading strategy known as scalping. I was taking my laptop to brunch because I just didn't want to miss an entry. I was watching charts 7 days a week before even just getting one decent trade. And that took a few days just to get it. I did all of this until I learned about market makers. And when I learned about them, everything changed. Because here's what nobody tells you. The market operates on multiple timeframes simultaneously. And if you're only trading one, you're seeing maybe 20% of the opportunities right in front of you. So what I'm about to show you isn't just theory. I'm going to show you my multi-timeframe approach that helped me cash out enough to build a property portfolio of 9 properties and buy my dream apartment overlooking the Palm here in Dubai. But it took 3 cycles to get there, not one. So if you're tired of choosing between being bored or being glued to your screen, this video is designed to fix that. So let's start with the one lie we've all been told. Pick one time frame and stick to it. When I was learning, everyone said the same thing. Focus on the 4-hour time frame. It's clean, it's reliable, it'll keep you out of trouble. And you know what? They weren't wrong about it being reliable, but the problem was basically everything else. So just imagine this, right? I had all day, every day to trade because I had just lost my business and I wasn't doing anything else. And so I was hungry, I was motivated, I wanted to make my money back and I was ready to learn. And I'm sitting there staring at 4-hour charts that do absolutely nothing for weeks at a time. And so my capital was there ready to be deployed, but it was just sitting there doing nothing whilst I was refreshing the same chart, hoping for a signal that might come next Tuesday, maybe, hopefully. And that to me is not freedom. And then when the bull market hit and suddenly everyone's talking about macro plays, I decided, okay, cool, let's go zoom out to the daily time frame. And finally, I could spot those beautiful macro lows and the entries on those were incredible. But guess what happens after I got into those trades? Those trades, because they were on the daily time frame, they took months to play out, like months. And so once again, I'm sitting there with capital tied up, watching charts for no reason and more money on the sidelines because the macro low was already locked in and there was no new trades to take. So I was starting to see this pattern, right? Every time frame had the same problem. Either nothing happens for weeks or everything happens so slowly, you might as well be watching grass grow. And so I decided there's got to be a better way, right? Probably the same thing that you go through in your trading journey. So I did what any frustrated trader does. I went to the complete opposite extreme, which was scalping. Now, I learned a few scalping strategies from some well-known traders, ones I often talk about on this channel actually. And for the first time in months, I now had something that I could do every single day. Finally, right? There's some action, there's some movement, there's actual trades happening. Except here's what they don't mention in those scalping courses. You become a prisoner to the charts in a completely different way. And what I'm talking about is having your charts open 7 days a week, 24 hours a day, because what I didn't understand back then was market makers. I had no idea when price was actually likely to move. I didn't know about CME times or weekend low volume or who really moves the markets. I just didn't know any of that. So I had to watch everything all the time. And I was taking my laptop to brunch with my friends, not because I wanted to trade during brunch, but because I was terrified of missing that one good scalp entry. And after all that screen time, maybe, just maybe, I would get one decent scalp every few days. So the irony wasn't lost on me. Like, I had gone from being bored because nothing was happening to being exhausted because I thought everything mattered. And neither of those two things felt like the freedom that I was chasing. But what I didn't realize at the time was that this seemingly frustrating detour was actually teaching me to read short-term price action, which is a skill that I use to this day. I just use it in a much smarter way, because what I didn't know at the time was that the breakthrough was coming. And that's what led me to eventually learning about market makers. This was the light bulb moment that changed everything. You see, market makers don't randomly just push price around. Their moves follow patterns, pretty predictable patterns, especially on the 15-minute and the 1 hour timeframes. It's what I show you on this channel week in and week out. So if you're not yet subscribed, now's probably a really good time to do that. But suddenly, instead of staring at charts hoping something would happen, I could actually predict when something was likely to happen. And that was a massive game changer. Now I was able to consistently get a trade every 3 to 4 days maximum. But more importantly, and this is the part that gave me my life back, I knew exactly when to look for those trades, what days, what time. No more brunch laptops, no more 7-day chart marathons, no more refresh screen anxiety, But here's the thing. This is the thing that really surprised me. I didn't throw away everything that I had learned before. The 4-hour patience, the daily macro reading, even those scalping skills, they all had their place. I just needed to understand how they all fit together, because the market isn't operating on one time frame, and it never was. The market is a symphony, and I've been trying to play along while only listening to the violin section. Once I could hear the whole orchestra, I'm getting carried away with this analogy now, but you get the point. That's when I became truly profitable. And that's when trading became strategic. And that's when I stopped being owned by the charts and started reading them like the story that they're actually telling me. And that story, well, it's got multiple plot lines running at the same time. Some play out over months, some over days, and some over hours. The secret isn't just picking one. The secret is knowing which one to follow and when. So let me show you exactly how this works, because what I'm about to break down isn't just theory. This is the exact framework that I use every single day to trade multiple time frames without losing my mind or my time. It all starts with one non-negotiable priority. And I'm going to get into what that first priority is, but all I need you to do in the meantime is smash that like button to let people know that this is a video many traders should watch. So my first priority always when it comes to trading is to get the high time frame pivot lows. Now, this is relevant in a bull market. In a bull market, I always want to get the absolute lowest price to get my entry. If you happen to be watching this video and it's a bear market, everything I'm going to tell you in this video applies in the opposite direction. So my first priority always is to get these big pivot swing lows in a bull market. This was a post that I put together for my community to map out all of the pivot lows that we've caught in this current bull market so far. The first one was literally the bottom of the cycle when Bitcoin was at 15,600. This was my target months before it even happened. And after that, Bitcoin ran to $31,000. The next one was this video here. In this video, I was calling for 24K as the bottom for Bitcoin. Bitcoin, and this was in June of 2023. And then Bitcoin ran to a new high of $48,000. Then in January of 2024, I was calling for $38,000 as the pullback after that last run, and we hit this perfectly before then running to $73,000. Again, in August of 2024, in this video, I was calling for $49,000 as the pullback, and after this, Bitcoin ran to $107,000. Now, in this video, which if you've been watching this channel for a while, you may know this one, and that was when Bitcoin dipped to $75,000 in April of 2025, and of course, you probably know what happened after that, because that was this dip right here, and Bitcoin created a new high of 123.5K at this point in time. But the reason why I'm showing you all of that is because these macro peak formation lows are the ones that create the best opportunity for long-term trades. And so these type of opportunities are the ones that I concentrate on the most. They're always my first priority for getting a position when either we're pulling back, like you can see here, or we're in a multi-month consolidation period, like you can see here. So now let's talk about the strategy. Once I've identified the peak formation low and I'm ready to take my long position, the type of trade that I'm going to take comes in two forms. One is called coin margin futures. Now, if you've never heard about it, coin margin basically means that the asset that you want to trade using leverage is what you will need as your collateral or your margin for that trade. So for example, if you want to open a long position on Bitcoin, you need to have some Bitcoin spot in that exchange, and then you go to that futures contract, and I'll show you where I do that in a second. And then when you open your long position, you will use some of that spot Bitcoin as your margin for the trade, and you will accumulate your profits in Bitcoin as well. Why do I want to do that? Because it amplifies and multiplies how much Bitcoin I can make. And in a bull market, that's what I want to do. So not only do I profit from the fact that the spot Bitcoin price is going up, but I'm also making more Bitcoin as that price goes up, meaning it's basically double the profit, or I'm making that profit in two different ways. And this is actually one free way that you can accumulate more Bitcoin. If you're somebody who doesn't have disposable income, for example, and you can't keep buying Bitcoin on every dip, you can coin margin trade it and make your profits in Bitcoin. So by the time you close that trade, you've now got the price of Bitcoin that's gone up, but you also now own more of it. So it's a very lucrative strategy. And if your only goal is to accumulate Bitcoin and you don't care about the price of it, you're a long-term Bitcoin maxi, for example, you could do it in a bear market too. Even though the price is dropping dramatically, it's not about the dollar value of your Bitcoin. In that case, it's a bit different. It's about getting more Bitcoin, which will obviously profit for you in the future when the next bull market starts. So it really just depends on your goals. But I use that to basically enhance how much profit I can make without having to take a million trades. Now, I do this on BitGet exchange, but there are other exchanges you can use as well. As an example, when you go to futures, you'll be looking for something here that says Coin M Futures. It can also say inverse perpetual, depending on the exchange that you're on. So inverse means using the asset instead of using a stable coin, right? So you find it here and you'll see that there is a list of many different cryptocurrencies that you can do this with. It's not just Bitcoin. Now, this list here, as an example, is perpetual. I don't do this particular trade, the pivot low high time frame trade. I don't do this on perpetual. I do it on delivery. And what delivery means is the particular contract you take has an expiry date. So if you see this, for example, BTC USD 1226, that means that on the 26th of December, if you haven't closed this trade, it will automatically close on that day. It expires. So if you get a pivot low and you think the cycle is going to go on for many more months, you want to be choosing the furthest away contract that you can possibly find. In BitGet, as an example, they have the 26th of December, that's 2025, or they have the other option of 26th of September. So out of these two options, you would choose the December one because it's the furthest away. Now, they don't always offer a lot of these. Sometimes I will also use OKX because they tend to have a lot more delivery contracts. Why do I want to do that? Like, I don't want my trade to be automatically closed. I want to choose when to close it. But what would be my reason for choosing a delivery over perpetual? Because here's the difference between the both. With perpetual contracts, you're charged a funding fee every 8 hours. So that means every 8 hours they're taking a little bit out of your position, and that's basically the fee for holding the trade. Now, when you're planning to hold the trade for many, many months, potentially, that could add up to a lot of fees over time. When you choose a delivery contract, they don't have the 8-hour funding fee. They just have your fee for entering, same as perpetual has, your fee for exiting, same as perpetual has. But instead of having that 8-hour funding fee, they build an interest rate into the price. So you will see on a futures contract with a delivery date that the price will be a little bit higher, but it doesn't matter because you're buying in at that price. You're also selling out at the higher price anyway in the end. So that doesn't matter, but that difference in price is basically like an interest rate that the exchange builds into that contract, and that's how they make money instead of having the 8-hour funding fee. So if you're planning to hold trades for a really long period of time and you're able to get your contract on a delivery, then you will save fees over time. Like I said, that's not available on every exchange. So if you only have the option of taking a perpetual coin margin trade, take it. You're still going to make a lot of money if you're able to get those pivot lows and you've picked the right part of the cycle correctly. So getting that coin futures trade is always my first priority. I will do that on Bitcoin. I will also do it on whatever other altcoins that look like they're going to be long-term bullish for quite some time. Being a crypto trader means most of your income is earned in crypto. And honestly, sometimes that can be really frustrating when it comes to spending in the real world. We work so hard analyzing charts, making trades, and building our portfolios. But what's the point if you can't actually enjoy those profits? This is my weekly ritual. I love buying myself fresh flowers to make my home feel beautiful and put me in a good mood. And when it comes to spending my crypto earnings on the things I love, I use the CAS card. CAS makes spending crypto as easy as using any regular debit card. You can top it with USDC, USDT, or other stablecoins, and it works instantly at over 150 million merchants worldwide. You can add it to Apple Pay or Google Pay, and it converts your crypto to dollars automatically at the point of purchase. And the best part? Their free K card gives you 4% cash back on all your spending. But I have the X card, which gets me 8% cash back, meaning my flowers today actually cost me 8% less than if I had paid any other way. And if you understand girl math, that basically means my flowers were free. If you want to start spending your crypto earnings on the things that make you happy, I recommend starting with the free CAS card. You can literally download it and set it up in under 2 minutes. No bank account required. Just make sure to check out their terms and conditions on their website before ordering your card. Trust me, being able to seamlessly spend your crypto profits on life's little luxuries is a game changer. In addition to taking that trade, at the exact same time, I also take a USDT futures trade. So this is the one that settles in USDT. So I'm getting my Bitcoin long, for example, that is going to settle in Bitcoin and make me more Bitcoin. But I'm also getting a Bitcoin long that settles in USDT. So I'm getting the stable coin. And why do I want that? Because the stable coin is what will grow my trading account. Now, again, always look for delivery. BitGet doesn't have delivery on this. I personally use OKX for that reason. So now you can see what I've got in place on a pivot low is my position that's going to accumulate Bitcoin and other altcoins for me. And I've also got my position that's going to accumulate USDT for me. And then I can kind of sit back and relax because those positions will take a month or more to play out. Now, once that macro position is locked in, here's where it gets fun because I'm not going to sit there for 3 months watching one trade. I'm going to milk every move that the new trend is going to give me. And so that's where priority 2 comes into place, which is short-term trading for the purpose of profit taking. This is where those perpetual contracts come in. And so basically all I'm doing short-term is trading the 1 hour or the 15-minute time frame. I'm looking for my W formation. If I see a W formation, I will take a long position and I will ride that up until I see an M formation after 3 levels of rise. Once I see that, I then pivot into a short position and I take the short position down until I see 3 levels of drop. And I'm basically just riding those swings, which can take anywhere for 3 days, depending on how strong the trend is. It can last up to a week, sometimes 2 weeks. So these are my short-term trades, and I'm taking these as futures positions on perpetual contracts. They do have the 8-hour funding fee, but on average, I'm holding my trade maybe about 5 to 10 days max, and the funding fees don't do anything. So with the short-term trading, one exchange that I trade on is Pionex to do this, and they actually have a competition running right now that I want to tell you about. They're giving away a share of $10,000 plus a whale bonus of up to $1,500. And this is what I like about the Pionex competitions. They're not just about who can risk the most. They reward consistent trading performance, which aligns perfectly with what we're talking about today. So I'm not saying go blow your account trying to win a competition, but if you're already planning to trade those short time frames we just discussed, why not do it somewhere where you could potentially earn some extra rewards? So I'll drop the link to Pionex in the description of this video if you want to check it out. But just remember, this competition, it's a bonus. The real prize here is mastering these timeframes so that you're not dependent on competitions to make money. And so that brings me back to the strategy. So when I'm taking short time frame swing trades, like I said, I'm doing that using leverage still, and I'm doing that on USD perpetual contracts. So these will have the 8-hour funding fee. Like I said, I'm not holding it for too long, so it really doesn't matter to me. Sometimes you actually get paid the funding fee as well. Like when you learn the TBD system and you catch those swings, often you'll be paid whilst the rest of the market catches up. So you don't have to be worried about funding fees. Just as a side note, Pionex also does have Coin M perpetual. So if you're wanting to short-term trade to accumulate Bitcoin, Solana, Ethereum, XRP, Cardano, any of these coins here, you can do that on Pionex as well. Again, just remember, if you want to coin perpetual trade, you need to have the actual coin as the margin. So if you want to take a sol trade, you'll need to have Solana spot, have that in your Pionex exchange, and then you'll be able to use it as margin to take this trade. For ETH, you need ETH, XRP, you need XRP, so on and so forth. Actually, as a side note, I try to always have a coin futures XRP trade going because when XRP decides to pump, it pumps hard and you can make a lot of money. And even if you don't want to hold XRP, you could take your profit in it after a major pump. You could sell out your complete profit to USDT and then just keep the XRP to use as margin before the next major pump. So the goal of this is to trade the short-term swings both up and down within a macro trend. And this is what I teach mostly on this channel and also in my courses. And I do that on the assumption that probably most people watching this channel are here to grow their trading accounts. But there is still one more layer to this. Between the macro plays and the quick scalps, there's this sweet spot that most traders completely ignore. And honestly, it's kind of where most of my easiest profits come from. Maybe not the best profits, not the highest risk to reward, but for sure the easiest. And so that is priority number 3, which is the 4-hour swing trades. It's kind of the middle ground, right? Like you might hold a 4-hour trade for weeks to potentially a month. When I'm trading altcoins, I'll often share those ones here on YouTube simply because they're easier to get. The lower timeframe degen stuff, that kind of all really happens inside of the Discord. But let me give you an example of that. So on the 4-hour time frame, basically everything feeds up in timeframes, right? When you see a 1-hour count like this, you can see on my chart that I've marked that there are 3 levels done. So when the 3 levels are done on a lower time frame, you switch out to a higher time frame to count your levels there. Then what you have to do is assess whether or not you think those 3 levels that have played out on the 1-hour time frame are going to feed up into the 4-hour time frame. And if they are, because you likely caught your pivot high off the 1 hour, if you think it's likely that they're probably going to feed up to the 4-hour, you can just hold that trade for a little bit longer. Or if you didn't get it for whatever reason, you can now enter having counted your levels off this time frame. So what you can see here on the 4-hour is that the trend is pretty chill. It's not that difficult to actually get a 4-hour time frame entry. Even if I zoom out, you'll see here that the last 3 level rise, we had all of this chop We had the pivot low right here, perfect place to go long. From that pivot low, Bitcoin did 24%. So let me paint you the full picture of what this looks like in practice. At any given time, I'm running multiple positions across different time frames, across different exchanges. And here's the beautiful part. They all work together instead of against each other. I've got my long-term Bitcoin or altcoin position in coin futures. It's pure accumulation. Every profit I make there increases my Bitcoin or altcoin stack. Same thing with Ethereum and whatever alts that look promising at the time. Then I've got the exact same trade, but in USDT futures, because whilst I want to accumulate Bitcoin and altcoins in a bull market, I also want stable profits that I can actually use. And this keeps my gains locked in dollars while still riding the macro trend. Now, remember those perp trades I mentioned? So those are happening on completely different exchanges, and there's a reason for that separation. You see, when you're holding a position for months, the last thing you want is to see every little pullback in your face every day on the smaller timeframes. It kind of messes with your head and it makes you second guess the big picture because you're too worried and too focused on the small picture and what's happening day to day. So the swing trades live somewhere else entirely. I can trade them actively, long and short, throughout the trend, bank the regular profits on them, and never let them interfere with my macro conviction. So yes, at any one time, I'm personally trading on 4 to 5 exchanges simultaneously. I've explained this also as a form of risk management in a prior video. I'll link it somewhere up here so that you can check that out. If you haven't seen it, I really think it will help you in building your strategy along with this video. And also more recently, I've added an additional form of making money, which is I've added GridBot trading to the mix. So that's just another layer of accumulation running in the background while I focus on active strategies. The result is that I have multiple income streams from the same market move. I don't have to watch 400 different coins every day. Each time frame feeds into the others, and I just had to master how to read that. So before you get too excited and try to replicate this strategy, just want to have an honest conversation about capital. If your account is under $10,000, this strategy probably won't work for you yet. And that's okay. I'm not saying that to be discouraging. I'm saying it because I want you to succeed. When you're working with smaller capital, you need a different approach. What you should do is focus on 2 exchanges maximum. One for testing new strategies and one for actual profit making. Maybe you could additionally hold some spot altcoins during the bull run if you believe in the longer term story, or you could even try out GridBot trading. There's actually a free course down below this video that teaches you everything you need to know about GridBot trading. So no reason not to check that out. You can learn it in under an hour. Do what I did when I had your account size is the point. Don't do what I'm doing now because I've built this up over 9 years, unless you're at the same position. So if you want to follow this journey with me, especially when it comes time to hunt for those big pivot entries, you should definitely check out our Trade Travel Chill memberships. When those macro opportunities show up, I'm always in Discord. I'm always working with our community to spot them together because the timing on those entries, well, that's everything. The path that I've showed you in this video works, but it's a path, it's not a sprint. And here's what I wish someone had told me when I started. This takes time. It really takes time, real time. 9 years of trading got me here, 3 market cycles. And yeah, I made mistakes in every single one of them. I lost money that I couldn't afford to lose. I held positions longer than I should have. I closed winning trades too early. Literally the works. But those cycles taught me that the market rewards patience and it punishes impatience in equal measure. This multi-timeframe approach I just showed you, it's not a get-rich-quick scheme. It's a get-rich-consistently system. The compound effect of understanding multiple timeframes doesn't just multiply your opportunities, it multiplies your edge. Because while everyone else is fighting for scraps over on one timeframe, you get to see the entire feast. And that perspective, that's what eventually funded 9 properties, bought me my apartment overlooking the Palm in Dubai, and gave me the actual freedom that I was chasing when I left entrepreneurship behind. This isn't the Instagram version of freedom. This is the real kind where you trade when the market gives you high probability setups and then you live your life when it doesn't. That's what 3 cycles of compound learning gets you. And that's the framework that changed everything for me. So look, like I said earlier, if your account is under 10,000, don't try to replicate this exactly. Start with what I was doing then, not what I'm doing now. Master 2 exchanges first. Have a test strategy on one, have a profit strategy on the other, maybe hold some spot alts, maybe check out GridBot trading. But if you stick with it, if you really commit to understanding how these timeframes work together instead of against each other, then you'll stop feeling like you're choosing between missing out and burning out, because you won't be watching charts anymore. You'll be reading the market. And the market, well, it's been waiting to tell you exactly when to pay attention. The difference between traders who make it and traders who don't isn't talent. It's not luck. It's knowing when to look and when to look away. And now you hopefully know when to look.